What up, my devil? Sensei-tutum here with another video for you. So, this week, public is going to get 2 videos. And a lot of times, members, you hear me say that at the beginning of the video, and then I end up not posting it because I just get too educational. And this might be one of those. We'll see. We'll see how it goes. But my intention is to post this up full. So if you do see this come out on Saturday, don't worry. You're still going to get your Ethereum video. Or maybe it'll be a crypto market video just like this video is going to be. So speaking of this video, we're going to take a look. We're going to go take the temperature. That's my temperature sound. Of the financial markets, of the traditional financial markets. And we're going to quickly look at a bunch of different charts and see if we can't take anything from it. And it's going to be a bit of a live analysis look, thinking out loud. So I'm not necessarily going to narrate every little thing that I do. But, yeah, we'll see how it goes. And, yeah, I already, I'll probably, since this is like traditional markets, I already know that I'm not going to get any views. So I'm going to do, I'll probably give you more education, right? And that means that this could end up being longer. I don't know. I'm going to try to make it quicker on each thing, but we're going to hit a lot of things. So if you're into the education, because that's the only thing that I'm doing on, the only reason I'm on the old YouTubes here, then stick around. I mean, I'm not here to show you the future. All right. So this is my ES count, my S&P 500 count. I chart on the S&P 500 E-mini futures chart. Mad derivatives, but it's the most important chart in the world, and you should chart it no matter what you're interested in. And this is my flavor of that chart that I like to chart. This is a 1-2 that I've got going in here. We've had that for quite some time, and we'll just briefly circle back to the macro perspective that I think that this is a 1-2. And you were saying macro, we can go out even further. I thought this was a 1-2, and we go out even further because one of the most popular accounts you see from Elliottians that aren't me, we'll put it that way, is that this is the 5th of the 5th of the 5th of the 5th. And I think there's a lot of, I think that that's an easy trap for Elliottians that aren't really that aware of the theory to fall into. But of course, I mean, I don't expect most people to be as knowledgeable and in depth on the knowledge of the theory as myself. And that's no flex, I just understand this theory, I think, better than most. In any event, yeah, so I've got this as a 1-2. I don't think that it's the 5th of the 5th of the 5th of the 5th. In fact, I think it's much more bullish than on the fucking chart, but what does that mean? What's the dollar worth if this is a 1-2-1-2 and then in 10 years this is fucking, sorry for the cursing, but like 20,000, anyway. So no need to dive further back into that. But though, one thing of importance to note is that back here, I did think that this was going to go much deeper. And of course, we had a bunch of stock market, we had, what do they call them? Circuit breakers. This pitchfork all of a sudden tilted me. Hold on. Almost as much as my dog that wants to be an idiot while I'm recording. Yeah. Two videos are kids and dogs in the background. You guys wonder why I play the music? Not just because I like it, but that's the number one reason. Just lock that sucker. Okay. Yeah. So at the time, I thought we would get deeper, and we didn't. And that's not something that I had a lot of experience with, a crash like that at the time. So I didn't think that it was an adequate retracement, right? Because, oops, gosh darn it. I believe at the time I wanted it to come just to here is all. Yeah, just to this level. But it didn't get there, and it would have, I do believe strongly. So at the time I thought this would be starting out as a reactive wave. It was not, and then about a year and a half ago or so, I realized, nope. Just because the sentiment, remember, this is the theory of following social mood, right? The mood didn't, the price wasn't necessarily representative of the mood in this case because they shut it down, right? So there's that. So I switched and pivoted to that this was an impulse wave and that now we're correcting. So one thing to take into account is that this is a market of, if we go back and zoom far out, it's shallow retracement, shallow retracement, shallow retracement, shallow retracement. This is a market of shallow retracement. It has deep retracements within there, of course, but the norm for this market is shallow retracements. And if you guys paid attention to the last video that I did talking about, you know, because we had that this was finishing correcting quite a while ago, potential spots to turn, we're starting to hit those areas, right? I don't have all of the confluences on this chart that we had showed in that video. I do believe it was public, maybe not. You know, it's probably one of those ones that I started out thinking was going to be public and then got too educational. So let's just now, I took more time on this chart than I'm going to take on the rest, but this is the most important, right? This is if you're taking the temperature of the market, this is where you're checking the, you know, and then we're sailing our ship along the sea of the market. Now I'm changing it to another bad analogy. You know, you gotta, if you want to know the current and the wind, you got to check this thing. So we're going to spend a little more time getting our bearings straight with this, and then we'll just go through and hit a bunch of stuff. So we're hitting this area of importance. So we're in this area. I think that's a very important area. And I think that, you know, we very well could have bottomed out here. I mean, but, you know, we cleared 3 swings into the, you know, the area of confluence, external retracement of this wave. So fully adequate, especially considering the market. However, I don't love the way this has uncertainty, right? But, you know, I'm going to say that, like, clearly, if you're aware of the Andrews pitchfork trading principles, we've missed this median. So, you know, we have a minimum expectation of making this line. And based on that, based on the potential, you know, resolution of a major 3 swing to here, you know, and this fuckery, I'm going to say that, you know, my minimum price expectation will be to here before we create, let's say, a low relative to this. Maybe we do come down, create a new low relative to that, and then go up. But, you know, I think that the turn is coming soon, but there's nothing that screams it on the chart for me. You know what I mean? So there's that. All right. So now, of course, you know, you can come over here and check the NASDAQ, the Qs, and it's just same, right? I feel less confident in saying that this one won't create another low relative to this. So I think that the other one will come, you know, make a deep retracement, but maybe right to this area. Triple bottom on another swing of divergence would be kind of nice. But I feel like the bottom area is coming. But again, nothing's hugely screaming pivot coming now. Maybe early in the week. So it's something to keep an eye on, but there's, you know, we're in the area. We're exhausting the trend at this larger 12-hour, 1-day time frame, you know, off this move from the high. You know, get your little antennas up and be ready for it. But you gotta get in there and hone it, and it's just not there right now for these charts. Doesn't mean that the individual stocks might not turn around first. So before we get to the individual stocks, let's jump over here to my economy chart that I like to have up. So this one, of course they all are, but this is, I've showed you guys this before. We've got WTI, we've got silver, we've got gold, and we've got the 10-year treasury note yield. This one I keep track of for the members, and I've been pretty much killing it on this thing ever since I started looking at it. Now you see that I have an ABC zigzag here, right? So that This would be a 335 down to here. Awful high. We had this, you know, we did make this. We did make this 50 to negative 236. Just wanted to put the numbers on the chart. Remember, complained about that yesterday in DMs for especially newer members, but in any event, yeah. So this is now. I'm not saying that there's necessarily algo activity there, but anybody who pays attention to my training videos, which I guess you'd have to be a member to do so, knows that algos that, you know, buy the 50, sell the negative 236. Those things are created based on natural levels in the market, right? So anyway, now the reason I have this base channel on here that we did break out of, and now we're breaking back out of again, I still definitely think, I definitely think that we're going to come back down here and test that. It doesn't mean we have to, but I definitely believe that to be the case, that this is the count. But could be much more bullish for rates than that, where this is just going to be a quick 1-2, 1-2 and keep on getting. Now that would suck for people who don't want rates to go up. Let's put it that way. Yeah, like your bond portfolio, not happy with that. That's why old Toot doesn't own any. Yeah, so if it comes back down here, it'll either, you know, necessarily it'll come down in a C, or it'll come down, and if we break out of this area, you know, really break down below this, then we'll go ahead and say that this is actually, you know, 1, 2, 3, 4, 5 coming down for A, B, C. But currently right now, I'm thinking it might be the more bullish of the two. So this, you know, what's funny is I rarely put labels on chart. I don't put labels on charts for myself at all, right? Because it just confuses things, because I'm looking at so many different counts at once, right? So let me just go ahead and quickly, because I realize this must be confusing. All Toots, hate doing this. And this is why I'll never be YouTube famous for Elliott Wave, because this is what you guys care about. It's like pretty numbers, right? And this is, to me, like, anyway, yeah, look for my series. It's going to come out eventually on the right way to think about Elliott, if I ever get around to doing it. So this is sort of what my primary expectation was based on price action. Now I think it's more likely to be, you know, let's just say here, we'll just do this. We'll just say some sort of 2 without zooming out. Like, this context is not relevant at the moment, but we'll say this, instead of an A, that's a 1, 2. Put these over here. Take this up. Put it to green because it's bullish. 1, 2, and then we'll just say that this was another 1. You know, and maybe 2 here. But I think I believe still here. Dang it. You guys wonder why I don't do this shit. Or maybe you don't wonder. Anyway. So 1, 2, 1, 2. Yeah, yeah, you're right. These are way of different degrees because Trading View. I blame Trading View. I hate their degrees. Yeah, and that's maybe another reason why I don't label, because I hate their labels. In any event, 1, 2, 1, 2, right? And that, again, would be mega bullish for the rates going way up. But you know, we'll see how things go. So it's a weird situation, and I'm not an economist. I just play one on TV. I don't, but I just like to think about the economy all the time. So I'll just keep track of the chart and let the economy play out how it does. But this is, I would say, this is the primary expectation at this point, that this 1, 2, 1, 2. I would like to see, you know, I wouldn't mind seeing this. Why? I mean, I have incentive for lower rates. You know, this helps pump up the asset bubble, things like that. Not that it's healthy. It's not healthy that we don't do that, but I don't know. I guess either way, you just be ready to take advantage of it, right? So, you know, the reason bonds, I don't own any bonds, right? It's because this is an inverse relation to the price of bonds. And when it's, down here as low as it's ever been, and this is just the 10-year, right? So, I mean, but this is, it's a benchmark. It can only go one way, right? It's like you're almost at zero. So the value, your bonds are, the price is as high as they will ever be. So like, that's a bubble. Like the only way it can go is down, and I still think they're going down. So I'm still not interested in owning any, but should this happen, bonds become a much more desirable investment, which is cool for like investment portfolios, I guess. Anyway, moving past that, gold. Now, this is one of the videos that I know for a fact I wanted to post. I had started to record it with the intention of posting to the public, but I ended up leaving it to members because I basically gave away. I did a shit ton of Wyckoff in it, as this is like a Wyckoff pattern thing you'll see on the chart here, and I got really deep on it, and because I use it a lot, let's put it that way, but I don't teach it, and I got really instructive in that one. So, but this is playing out perfectly. I mean, based on this, you can see that obviously I think that, when price came back down to here, it was probably a buy, right? So there's a lot of buys within here based on the Wyckoff, and not necessarily the Elliott as much, right? And I do believe that this is going to continue on to all-time highs. We just barely tested them and rejected. And once we get above it, we'll probably just keep on getting it, sort of like that. I saw somebody say $10,000 gold. I think that's a little ridiculous, but I'm bullish on gold. So silver, I might even be, let's just put it this way. I think that gold is currently testing all-time highs. Silver and gold are, let's just say, in relation to other metals, other commodities, they've been lagging. They're manipulated, of course, but they've been lagging. But, I think the industrial use case of silver is one thing that probably keeps it down a little bit, but I think that importance is rising, as well as the speculative value. So, I think all-time highs are reasonable. If we just, I'm not gonna just do something like that. $60 silver could be a thing. Think that could possibly come in. So yeah, I mean, I'm sort of bullish on these things, while I'm not necessarily on bonds or the S&P at the moment. I think we're getting close. So now this is crude oil. Oh boy. So, I think I said earlier that I like to use divergence to pick tops and bottoms, especially bottoms. And I don't like it as much for tops, and this is one reason. Now, this is super reliable. It really is super reliable. When you see something like this, you're gonna get one of two things. You see how the oscillator is making lower highs and the price is making higher highs. This is a very reliable thing that you're gonna get a retrace. And look, you did get a retracement. It doesn't say how much of a retracement. La la la. People read so much into things, but and anyway, let's just say people don't think about the markets correctly, at least in my perspective, because I'm an educator and I'm talking to people that are learning. So that's just how that goes. But in any event, yeah, it's retracing. It did retrace, but it didn't even get external. I mean, it did, but barely, right? So in my eyes, this amount of divergence typically would have been, I would have expected a deeper retracement. But when that doesn't happen, this is exactly what you get. When it breaks out of that divergence, it does it like this. So that's why you need to never just do one thing. So many people, I get this all the time from I'm chatty. I talk to students and, they DM me. I'm going to talk to them. I'll make new friends. But and they always invariably, especially if they're doing well right now, they want to show me their thing. Like, oh, this is my thing. Or they'll tell, or even people that I keep in touch with for now years. Like, I got one guy that'll send me something I've never seen him send me analysis-wise. And this is a successful trader, mind you. And he'll be like, oh, this thing is everything. He'll use words like that. Like, he's very hyperbole driven, let's put it that way. But this is everything. This means the most. And it's like, I've never even seen you put that on a chart before. So I can't remember why I got on that tangent. Let me get off that. But, things are important. Oh, that's why. Because this is important, but it's not the only thing. It's not everything. There's nothing that is everything and only thing. And that's why that's why Elliott, Ralph Nelson Elliott, Robert Proctor, AJ Frost have all, encouraged people to incorporate what they do, these other analysis techniques, into Elliott Wave. There's no reason not to. That's why there's geometry and Fibonacci and this, that, and the other incorporated with Elliott Wave. So, because remember, Elliott Wave is just the tracking of social mood. When you start putting in Fibonacci numbers, geometry, things like that, like those aren't directly correlated to mood, but they just happen to jive. So nothing that I show you ever is like the thing. I'm never showing you anything. This is the one thing you need. It just doesn't exist. So I don't want you to think that I'm doing that. So anyway, this is a very reliable pattern. More so on the bottom, but this is the way it does it on both ways. That you get these divergences in the triple swing divergence, especially, because you see it reacting, is good for a play. Like, you could have shorted, down to this level would have been an obvious short. Like, this would have still played out in your favor, but don't read more into it that this is going to zero now because you saw this kind of thing, right? So everything I show you, context. But when it fails spectacularly to both sides, just like this. So, but now it does look like and I can see this, talking about social mood, I think that people have been scared to shitless about energy. And I think there's going to be news coming out, and I don't know. Again, I'm not an economist, and I don't want to spread those thoughts, but I'm an analyst and technical analyst, and I think that this is going to at least come down and, I think we're going to come back down to more reasonable levels, about $50 a barrel. Which, to be honest, I think that no matter how green you are, I don't know, it's probably where you want it to be, I would hope, for, human civilization, especially in America, where you've designed an infrastructure that requires us to drive, and you haven't provided vehicles of the alternative nature yet that are affordable. So anyway, by the way, I have a hybrid vehicle. That's neither here nor there. I'm also, not the average American. Let's put it that way. Okay, so that is oil. So, I do think that energy may be. So as we're going through these sectors, taking the temperature of the markets, I think that, S&P getting interesting, but not quite there yet. I think that, I think that rates are going to come back down. They're going so quick right now. Like, I think that they're under, they're going to come down for some relief. And, but I do think that, unless we break below these levels, I think long term we're kind of locked into some tightening here. Let's put it that way. Silver and gold, I'm bullish. I think there's more upside room on silver. I'm not saying that, I'm not telling you to long right now, but this is just an obvious level, right? And then obviously if you come back down inside, what do? Like, oh, we're back inside the range and we're not going to get external. Do I still want to be in the position? You do what you want. You got to, none of this I'm telling you about trades. You got to figure those out on your own. This is more of a 30,000 foot view, just what's interesting. So that's where we're at right now. Let's see. What do we want to do? Do we want to get into the individual stonks? Yeah, let's do that. So individual stonks. Clearly, energy has been up, and we just talked about that based on the WTI. This is the Energy Fuels Inc. ETF, but you know, it's got all kinds of energy stuff in it. Broke out of the downtrend. I'm pretty sure I've had this and been alerting this to members for quite some time that it's interesting. You want to be in it, and it has been. I'll be fully transparent. I always forget to buy it. Let's put it that way. So I don't have any of this. I trade it here and there, but let's see. Does this look like it's a little bit overdone? Yeah, it does. I'm just going to pull dominant swings here. Something like that. You know, however it gets there. But yeah, it looks a little overdone, like it could come down. Test this potentially. Maybe it goes up, makes another swing before it does so. But feeling a little bit toppy. Now, if fuel's going down, oil's going down, stock market's probably going to be doing well, right? Debating on whether or not I should explain the reasoning behind that, but you guys, I mean, if you know, you should know what that means. Okay, let's get into some individual stocks. So, you know, we have one of the biggest movers of the market, Amazon. So, giant sideways consolidation. I thought for sure when we were breaking out of here that we were going to get somewhere, and then we didn't. Ending diagonal. A. Three swings. I really haven't looked at this chart on this perspective in quite some time. But it's a very important chart. Gap up. Yeah. So this is, I would say we are in a C wave right now. Yep. I think we're in a C wave right now. That's a C wave. This, if that's a C wave, this coming down will be a lot of pressure on the S&P, but
I've been doing this shit for 59 years, I used to be a handsome man. Look at me now. I'm fucked up. Miles, you don't define Jack.
I don't know, something like that. Obviously, you're looking for like a 1-to-1 sort of ratio.
Music is nothing but style. I don't know what they're talking about, and I don't care to jazz is just
No, look at that.
an attitude. You know what I mean?
Yeah, I think that we're going to come up here before we come down here. Then maybe we reverse at this area. But don't let it fool you. Don't let it fool you. I mean, if this comes up here and it doesn't come down in 3, don't be committed. But yeah, I believe we're in a C wave there. I feel pretty strongly about this. So that means in your trading, 3C, that's a nice trade setting up potentially next week. Yeah, I'm definitely not doing this for the Ethereum video, I'm not going to do this for the crypto markets. If you're disappointed in that, let me know on this video or the ETH video, because I'm going to actually probably record the ETH video like right after this. So this is weird, man, because that looks 3-wave like whoa. It looks really 3-wave, but you see the if you don't see what I just showed you, then I can't help you. But if you see this, then maybe, just maybe, you'll be able to do basic Elliott wave. Right? WXY, 3 swings, 1, 2, 3, 1, 2, 3. That looks 3. Sometimes, as my friend Ralph Nelson Elliott said, the right look is not always evident at every degree of trend simultaneously. But that 3-wave move just makes me super sus. But I'll be honest, that's why I don't keep levels on my. I like a minimalist chart, boys. You know, I don't like a bunch of fucking indicators. I don't like oscillators. I don't like EMAs, SMAs, the moving averages. I like price. My analysis is based on price. All my techniques are price related. You know, geometry uses price. Elliott wave, price. You know, support and resistance, price. Volume. That's an indicator. But anyway, yeah, so this is funky, but to be honest, man, I'd be looking for signs for this to be getting sleepy. I'd love it to make another low relative to this guy. I mean, yeah, I definitely wanted to meet that median. Let's draw it like a nice normal human being. And did we get it? No. This will help. I like to typically look at extended trading hours. I want to see all the price action. Yeah, maybe not quite done yet, but I'm interested. I'm interested. Let's put it that way. For something like that. But two, you said this looks 3-wave. Again, I just told you what Elliott said, all right? And, you know, so is this an adequate retracement of, I don't know, let's just say these are 3 swings moves, right? So does this appear to be an adequate retracement of this, even this move? Like, is for an X wave, if we're going to go down for a Z, or even if this were to be a 4 and a diag, 1, 2, 3, 4 of some sort? No, I don't think this is longer than this, so it's not going to be an contracting diagonal. So in fact, this would have to be bigger. I mean, I don't want to get into the details of the theory, but let's just say, take my word for it, I've considered it. I think about it a lot. You know, I can't narrate everything that I'm thinking, but I consider all parts of the theory and all parts of my analysis simultaneously. Doesn't mean I don't miss things, but suffice to say, I'm interested. You know, not right there. Maybe could, but you know, you gotta time your trades yourself. So let's see. That's Amazon and Tesla. I gotta write this shit down because this is shaping up what Toot's gonna be thinking about next week. And of course, silver and gold. How far? 34 minutes. Jesus. Okay. Let's look at Boeing because you know I consider it a defense contractor. It is, but you know it's much more than that, obviously. And I feel like these stocks are probably looking to do pretty good right now. And there's nothing here that indicates that this is the turn. And you clearly see what the count that I've had, right, on the chart. But this does feel more corrective, although it's breaking out. Get rid of this guy. It's been on the chart a long time. Okay. Oh, look at that. Yeah, I like this to have found a bottom for now. Let's get down in. I don't think I want to trade this necessarily right now, but I think I like it to have found a bottom. I think defense might be a booming sector here going forward. Unfortunately. Yeah, so this is 35 minutes. So, yeah, this is my live look, my temperature check of the markets. That's what I'm thinking. So I think that energy is a little overdone. I think the S&P, the stonks, basically use that as a thing for the stonks. Finding bottoms, time your entries. Gold, bull. Silver, bull. Bonds, hate them. Let's see, what else was it? We didn't even talk about that. Yeah, so that's about where I'm at right there. So, this one's interesting. Snowflake, friggin' IPO. It's it's supposedly a pretty decent company. I just think that this thing is super. Like, if everything is going to end up turning, and you remember how I said I like to use divergence to pick bottoms. Of course, there isn't a lot of information here, but on typical charts, feel like this is a very interesting area. Like, this is like capitulation. So I think that this could be in play for a bounce. I don't love it because there's just not that much information. There's another one that's really overdone that I feel even better about because there's more information. Wait, that's not what I wanted. PayPal, baby. Look at this thing. What's that look like, though? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Look at this. The market said, I don't know about this. I like this one a lot for a bounce. Like, this is just overdone. Like, it's still a good company. There's bad news, but did it belong to be up here? Maybe not. Does it belong to be down here? Nah. This, to me, these are the type of, I don't know. If you're like thinking about bags, like, it's like if you're going to buy a crypto that, like, oh man, this is a good project, I believe in it. It's just oversold, because of speculation. It's like, this is kind of the same. By the way, what are they involved in? Crypto. So maybe that's why I like them. Yeah, I just don't think that PayPal's going anywhere. I think in a future where crypto is sort of going to take over the financial markets, a lot of the, let's say, legacy financial institutions don't need to be here. I think PayPal's positioning themselves in a way that they will remain. So, I think this is, I'm not saying that I think this is a great long-term investment or anything, but I just think that there's definitely, let's just say, could be a bit of a value buy in this area based on everything that I talk about. So, all right, I think that's plenty for this video, boys. Yeah, I know the audience won't be deep on this one, but there we go. So maybe you get my idea of the temperature of the traditional markets, and again, things that I'm interested in looking at right now are the Amazon, the Tesla, the gold, the silver, yeah, and maybe even potentially energy short plays, potentially. All right, boys, toot out.